Hi, this is Kribakaran Rajendran. Welcome to Trading with Grow channel. In this video, we're going to talk about what are the 5 different ways to improve your intraday trading results. See, compared to positional trading, intraday trading is a lot tougher because of the time window, where you have time between 9:15 to 3:15, where within 6 hours of time frame, you have to take the right decision. Even if there is any loss, you have to contain the loss. And even if there is anything that is going against you, you shouldn't panic. So there are a lot many things that are there with respect to intraday trading. So I'll explain these 5 principles which you can apply with your intraday trading. If you follow that, definitely there is a higher probability that your overall results could improve with respect to intraday trading. See, the first and foremost principle with respect to improving your intraday trading results is following a back-tested trading strategy. What does that mean? Which means that if you're trying to enter into the markets and if you're trying to enter or exit, or you need to use the right stop loss, right targets, everything has to be predefined. So you have to simply follow whatever the rules says. So only when you go by the rules, you will not panic when the market goes against you. That is why it is very, very important to follow a back-tested trading strategy. So how do you do that and how it helps? So basically how it helps is when you have a specific idea. For an example, if there is market gaps down or gaps up, so what is the probability that after the gap down the market can continue to go down, or after the gap up what is the probability that market can continue to go up? So these are historical data analysis. So you can go and download these historical data from NSE and check what is how many number of times after a gap up market continue to move up, how many number of times after a gap down market continue to move down. So it will give you a statistics and no probability of idea. Okay, more than 60% market continue to move up after a gap up, or market continue to move down after a gap down. So once you have these data, then you can build your trading strategy on top of that, and then you can proceed with your intraday trading, because data doesn't lie. So you can simply rely on whatever the data says, and accordingly you can take your trading decision. And also, if you're an option trader, there are many third-party tools like StockMark, AlgoTest, multiple tools available which helps you to backtest any kind of option trading strategies. So you can simply try and backtest how does a short straddle works, how does a short strangle works, how does it works with a minimal stop loss or a large stop loss. So all these things you can verify it, test it, and see how it has worked in the past. So because when it works in the past, there is a high probability that it might work in the future. It is not 100% sure that you're going to get the same backtest results and live results, but definitely there is a chance that it might work. But in the backtest itself, if it doesn't work, then 100% it is not going to work in the future or in the live markets. So that is why you, before you put in your own money and try to trade in the intraday markets, just make sure whatever the logic that you are trying is has worked in the past. If it works in the past, definitely it might work in the future. But if it did not work in the past, there is no way it is going to work in the future, so that you can save your money. So just try to backtest any kind of intraday trading strategy before you go live. Once backtesting is done, you will clearly know what is the risk involved, what would be the maximum drawdown, what would be the overall returns and everything. So now what you have to do is you have to follow a risk management. Risk management greatly helps you to control the overall drawdown. You will not panic when the market gives you back-to-back losses. So you should know exactly how much is too much. So how do you decide that is using the position sizing rules. So let me explain what is the money management or risk management rules that you could follow with your intraday trading. So the Excel sheet that you're seeing right now is nothing but I have just 3 different symbols: Nifty, Bank Nifty, and Fin Nifty. 3 different symbols. Okay. Now consider that my capital is 5 lakhs. Okay. So as per the back test, I could see from the back test that the maximum risk per trade is, this is what the maximum risk per trade with respect to each of the index. So with respect to Bank Nifty, I have 4,425. So in case stop loss is hit, this is how much I'm going to lose. This is what the backtest says. So for all the symbols, now I have what is the maximum loss that I could face in a day with respect to one lot. So now I have 5 lakhs of capital. So now I have decided that no matter what, in case if stop loss is hit, this stop loss is hit, I should not lose more than 2% of my capital. So 2% of my capital, which is out of 5 lakhs, if I consider 2%, which is 10,000 rupees. So I should not lose more than 10,000 rupees when the stop loss is hit. Now tell me what should be the number of lots that I should trade. This is the calculator which I use. And this is nothing but it just divide the risk capital, which is 2% of your capital, that is 10,000, divided by what is the possibility of maximum loss that you could face when a stop loss hit. So when you know divide these two, you get a number which is 7. So the ideal number of lots that you can trade is 7 lots. So when you trade 7 lots, you just multiply these two, 7 into this, it tells you 10,000. So which means that when the stop loss is hit, I'm not going to lose more than 10,000 rupees. So I'm okay to lose 2% of my capital. So this is how you should trade the number of lots. See, instead of, some people, if they have 5 lakhs capital, they'll simply trade, okay, I'll trade 10 lots, 10 lots, 10 lots. So when you trade 10 lots each, see, the risk factor goes up. When the stop loss is hit, you're going to lose 14,000. And with respect to Nifty, you're going to lose 19,000. With respect to Nifty, you're going to lose 23,000. So which is much, much higher than the actual 2% stop loss. I mean, 2% loss. So the ideal way is don't trade with directly, a round number of lots like 10 lots or 5 lots. Calculate what is the maximum risk per trade with respect to per lot. Then use 2% of your capital as your overall risk. Divide these two. That is going to tell you what is the ideal number of lots. This is the right risk management that you should follow. And the next one is using real-time analytics. So instead of just relying on price data alone, if you are trading with options, you should look into the options data as well. What are the rest of trending OIs, where the call options trading, what is the put options trading, what is the put call ratio, what is the overall open interest. So when you track all this data on a real-time basis, and then when you look into price, that gives you a clear conviction. So let me explain that with you an example with a free tool using which you can use all this real-time analysis and take a right decision. So the site that you are seeing is a Trading Tick. So tradingtick.com is a free tool that gives you all this data, like what is the overall call versus put ratio, what is the overall trending OI. For an example, you could see this chart that shows what is the call and what is the put OI. So when call OI is higher than put OI overall, it shows that market is bearish. In case if put OI is higher than call OI, then it denotes that market is bearish. So likewise, you can see what is the trending strikes as well, and you can see what is the overall OI analysis, like where the market is, whether the call option writers is having a upper hand or put option guys are having a upper hand. So these green bars are nothing but call option writers. These red bars are nothing but put option writers. So currently, when you see this data, it tells you, okay, overall the call option guys are having a upper hand, which means that the market might be currently in a bearish phase. Then you'll think, okay, based on the options data, so this is what the market is, where the market is heading. If it is bullish, you take a call options accordingly. If it is bearish, you can trade with put options accordingly. So keeping an eye on real-time analysis greatly helps. And the fourth part is you need to have this continuous learning mentality, which means that you cannot just learn one strategy and just set for lifetime, because market keeps evolving, people keeps changing, overall market structure keeps changing. So if you ask 10 years before that do you believe in any kind of options trading, nobody would have said that, because back then many people were trading with futures or cash market. But now India is the largest market that trades with option segments because of the introduction of weekly options. So once the weekly options came in, people started adapting to this new change. People started learning about it. People started learning about zero DTE, what is 0 days to expiry options, what is the weekly options, and how weekly options varies from monthly options, how it can help people to generate higher income than monthly options, why theta decay is higher with respect to weekly compared to monthly. So when you keep learning about all these things, it opens up new trading opportunities, so that your risk is diversified, your capital is diversified, and also the probability of making higher returns is also there when you have this continuous learning ability. When it comes to the most important aspect, psychology, which is having the right discipline to stick to the trading system, plays a very, very vital role. I always say this example. See, you know that Michael Schumacher is one of the best F1 racer. He has won back-to-back championship for Ferrari. So if you ask someone what made Michael Schumacher to become the champion, many people might say that it is the Ferrari engine. It was the best built car by Ferrari, which made Michael Schumacher to won back-to-back championship. But the real fact is, it is not the machine that gave the championship. It is the driver who is driving that machine led to the back-to-back championship. Similarly, it is not simply based on the trading strategy you are going to make a good returns. It is the trader who is trading that trading strategy going to make the right trading decisions and going to make no huge returns. So if you do not have the right discipline, no matter what, even if you have the best trading system in your hand, still you might fail if you do not have the right discipline to stick to the system. So no matter what kind of trading system you're currently trading, or no matter whatever the trading system you're going to learn in the future, always remember there will be definitely a bad phase with respect to any kind of trading system. So you can face continuous losing streaks, you can face continuous winning streaks. So there will always be ups and downs with any kind of trading system. So the only way is you need to accept that loss is inevitable with respect to trading. So you can't avoid that. Just like how you run a hotel business, there will always be food wastages by end of the day. So you can't expect no hotel industry to run every day with a sold out meals. There will be definitely some leftovers, right? Similarly, with respect to trading, definitely there will be days where you're going to face losses. There will be days where you're going to face profits. So you need to accept that. You need to once you accept this, then you will have the right discipline, right conviction to trade the trading system, because it is all about sticking to the trading system during the rough phase plays a vital role. You could have made a very good return steadily, but there will be some days where you might face continuous back-to-back losses. That is when you might lose conviction in your trading system. Never lose your conviction with respect to your trading system, because when you trade higher lot size, when you trade with a capital that you can't afford to lose, that is when you start doubting your system. That is when you might abandon your system. So that is why the risk management, which I have explained in the earlier part, like how much is too much, what should be the ideal number of lots that you should trade, all this comes into picture. So once you adapt all this, once you mix all the 5 principles which I have mentioned here, then automatically you could easily increase your overall results with respect to your intraday trading, no matter what kind of trading strategy. Definitely by applying these 5 principles, it is going to help you greatly with respect to whatever the trading system that you're going to trade. So this is what I wanted to convey in this video. I hope you found this video really helpful. In case if you have any questions, please post in the comment section. I'll address it.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.